All right, greetings everyone and happy almost spring. I say that as I'm watching snow lightly fall onto the ground north of Boston, but it is coming and looking forward to it very much, as well as this presentation to kind of go over a little bit of how I approach my market analysis. I am a market timing caller, which means I like to predict where price is going to move. I like to call tops, I like to call bottoms on multiple time frames, whether it be short, medium, or long term. In my book, by the way, that is typically called chase, swing, or trend time frame. And basically, I review asset classes and look at the intermarket relationships and figure out what's going to happen next, and then try and figure out when it's going to happen. Most recently, I had an oil call that I actually was here presenting back in October. If you remember, it was an energy crisis topic. It was October and about middle of October, and I basically predicted that we were going to go up to 130 in oil. Guess what we tagged yesterday? So that's my job. My job is to identify inflection points in major commodities, currency, crypto, you name it, and then try and figure out when it's going to happen. So I actually made this call in March of 2021, wrote a big article about it, presented it to clients, and said we could be at 130 by March 2022. Trust me when I say Ukraine, Russia was not on my bingo card, had nothing to do with potential war outbreak, World War III, nothing of that. So it was very much a technical and an intermarket read that happened to come to fruition. And then today we had a very large drop in oil, in the oil markets, which is also not a surprise. They've kind of took some profits. We had a big air pocket of risk underneath, and we had about a 14% pullback. It's called profit taking. So this is basically how I look at markets. And then, of course, trading in and amongst all of these different moves is lots and lots of action. So the oil proxies, and then, of course, the tech wreck that we've been in really since February of last year under the surface, but then it started in November. So that's basically what I do, and then help clients navigate. So I am very glad that once in a while I'm doing a presentation, but most of the time, or an interview, but most of the time I am running a live trading room for my clients. I have actually 5 different products from those who are interested in getting into trading, and or they're kind of more, they're newer. I have a Discord product, LaDuc Trading Discord. I have that's a lot of momentum traders. I have my main core product, which is Fishing Club, and that's where I run my live trading room every morning, every afternoon, and we set up, I deliver all of my analysis, macro to micro, and then we set up all the trades. And I'm looking very much for stuff to chase, as well as swing trade, as well as trend trade. So that's kind of my value add for clients, is I'm doing a lot of analysis and sharing, and either they will take it, pick what they want and try it on. But basically, this is how I serve clients from retail to institutional. Speaking of institutional, I have a new product out, which I'm very happy to just kind of let you know right here, for those who are more into the macro themed trades. Brought in a former client, actually he has been for years. His name is Craig Shapiro, and he's a hedge fund manager. And together we are helping clients that are more institutional. So a little bit different time frame, definitely different vehicles for trading. And he's on Bloomberg Chat. So this is a new product that I'm very, very happy to promote. And then kind of getting back to the fishing, if you will, I'm using technical analysis for all of this, but I do use a macro as a backdrop. And then I get really into sector rotation. I think a lot of analysis on what to trade is, where's the money, flowing. There's a bull market somewhere. There's always kind of a strong rotation from banks into into the NASDAQ plays or NASDAQ into banks as kind of, there's always going to be some type of move into a setup for sector rotation. And in lieu of sector rotation, that's when we have volatility. So it's really my job is identifying when we're going to have outsized volatility, or like we're having right now, which is trending volatility. We'll talk about that a little bit more. I don't have really, I would call it a set presentation here today. I wanted to mostly open it up and answer questions, maybe do some chart requests too later on. I was asked in Twitter when I said, what should I talk about? Because I have, all kinds of things that I could talk about. It was very much a little bit of how you got here and what are some of your hits and misses. And then where are we going? Where's this market going? So now that we've hit that 130 in my oil call, I do have some very interesting, I think, very, very counterintuitive calls in oil and copper and some other commodities that I believe will continue to pave the way for this theme of mine for a long time, a year and a half now, which is basically things over paper. So I want to talk about that a little bit. And just for those who may not be familiar with me, I am live trading room commentating. I am posting my analysis in a client workspace for clients across, again, multiple markets and timeframes. I am using macro as a backdrop, which is economics, a little fundamentals, although I have a desk, which is really nice. I've got a whole bunch of women on my trading desk who specialize in different areas. Like I've got a futures trader and then a fundamental analyst, a macro hedge fund manager. I've got a trader that focuses on gamma, which is the quant. So I have a lot of depth that I can bring in to also identify why a market is moving the way it is. Like this morning, we're having a really nice oversold bounce. And I just shared with clients why that's happening. That has to do with a lot of gamma level in the market structure. I'll show you that in a little bit. But this is my main theme of basically things over paper, which is basically commodities would be taking a front and center view for our trading investment returns, and paper would be taking a back seat. So I also did at the beginning of the year a stock charts TV interview, which was basically my theme of value over growth, and that NASDAQ would underperform. Well, NASDAQ, as you know, is already down about 20% and SPY down about 12%. And a lot of folks think that this is it, this is the bottom. I actually think we can have a sizable bounce if we get some really nice headline that there's resolution of some sort in the Russian-Ukraine war, but I'm less confident on that. There's also a lot of speculation that the Fed won't raise next week. I am also less confident about that. I still believe that there's absolutely going to be a tightening cycle. And in fact, today marks the last day of quantitative easing purchases by the Fed. So we're going to be moving into a new regime of tightening and rate hikes, despite the spiraling inflation that we have right now, especially in oil. So this is just kind of a graphical representation of where we had this incredible rotation from basically the 2009 bottom into tech, 13 years of outperformance in NASDAQ. This is pretty much what that means. And since this September 2020 peak, we've basically been slowly going underneath the surface, and now in the NASDAQ index itself, rolling over, and commodities have been picking up that slack. So that rotation from paper, which is tech, growth, bond proxies, into things like oil and wheat and copper and nickel and et cetera, right? And the companies that make those things, right? This is now the commodity, the new currency of war is oil. So this is why this is incredibly picturesque, because you can see it graphically of how the tide has turned dramatically from all of your speculative growth plays into your commodity plays. This has basically been a theme that I've had since July of 2020. I'm a big inflationista girl for the past year and a half plus. I also believed very firmly that we would have higher rates and lower bonds. And that, by the way, I don't even think we've fallen yet enough in bonds. So I'm a bear when it comes to bonds, and I am a bull when it comes to higher yields. And I think that that's also represented in this chart. So that hasn't changed. It just really, really hasn't changed. Big picture, that's kind of where we're swimming. So, but that was what I was basically presenting last time I was here, not in December, but in October, about the energy crisis that we were going to have. And there was an oil shock yet to come. And I presented this exact slide, no changes, and how we were going to be coming up here to this 130 mark. And that was warned in March of 2021. So we're there. And I believe that we're having exactly what we should have, which is profit taking and volatility, which intraday is getting very noticeable in the markets. SPY and NASDAQ are, having big intraday moves from, 1 to 3%, and still trending downward. Well, I think oil is going to have the same type of activity where we hit that 130, we come right back down to like 112 area. But in time, I believe we're going to go through that 130 again. And in fact, I had recently mentioned this, and hold on one second, let me just grab this. I had mentioned this, we tagged our 130, and a client of mine asked, so what's the peak? 150? And I went, no, sadly not 150, 260. And he's like, no way. And I'm like, yes way. And there are a few reasons for that. Technically, we can absolutely have massive volatility in the next few weeks around that 130 to 112 in crude, in West Texas Intermediate crude. I believe once we hit and go through 130, we can very quickly hit 150, then 200 and higher. There is not a resolution that is going to be energy bullish with Russia. And we are far from getting our act together politically, and I'm talking energy policy here in the US, as well as partners, partnering with the devils, if you will, out there in getting oil stabilization in Europe and lowering the costs also here. So any deal is still made with Iran and Venezuela and Saudi and Arabia and the like is still not going to appease this chart that I have, which is inflation. In other words, price, 2008 oil was $145 at its peak. If you remember that, we're only at 130 at the peak, but our CPI, which is our price index for inflation, is screaming higher. We're going to have another print tomorrow morning. It's expected to be anywhere between 7.8 and 8.1. It's going to be hot. Next month, it's even going to be hotter because of the energy costs that are obviously ripping through the markets and homes. Literally, cost of heating, it has doubled, etc. So this is something where I'm pretty confident technically, if we stay above that 112, then we're going to have another chance to push through that 130. And through that 130, we can see a doubling, literally a doubling. Speaking of doubling, nickel has recently had outsized moves, and it went in 100% increase in a day. So they closed that particular market, LME. If anyone's into that particular drama, I posted some things on my Twitter feed. So it's always like, what's the next commodity to spike higher? We've had wheat, we've had oil, we've had nickel, we've had UK nat gas. What's next? I think copper's next. So I think copper right now is doing its job to try and stay above. I'm just going to kind of show you this futures here. Metals. Okay. You can see copper is kind of doing its job to stay below $5. Okay. So, and yes, we're having some big pullbacks right now. Not a surprise. We always, we have to have a dance. Right now we're having a profit taking in energy. Specifically oil is dropping, and then that gives a nice little fresh bounce. in lots of the oversold European markets, as well as growth tech markets. I do not believe it's the bottom, but it is a very strong oversold bounce. And then copper comes down as well, just like platinum, silver, gold, the whole thing. But I believe once this gets and pushes through $5, we're going to have a doubling in copper as well. So I've discussed with clients some trade setups for tail risk, should that happen. And those are stock and option plays in 5 key underlying vehicles for copper. So that's the kind of thing that I'm setting up with a trigger of $5. Does that make sense? So that's, if you leave now, then at least you got one trading idea that I'm watching like a hawk, same way I did with oil, and that's copper above $5. So how did I kind of get to focus on commodities? Because that's not my thing. My thing is all I want. I want to know what's going on everywhere. I did this theme of things over paper since July of 2020. So I've been on this, rotation that we were going to pick up speed. We were going to have NASDAQ underperformance, and I'm a big, sector rotation freak. I really, really study that stuff very strongly, even on a daily basis, not just multi-month. For example, today, I even tweeted first to clients that we had a market structure that was very supportive for an oversold bounce. This is called gamma, and it has to do with optionality. The more folks that are actually selling puts, the dealers have to cover by buying the underlying in futures in order to be delta neutral, and that basically creates this reflexive move higher in the markets. And I believe we have seen this recently on Thursday and Friday of the invasion, February 24th. Let me just show you that real quick. If I can get a clean one, I will show it to you. All right. So here we go. So remember on this was the January 24th downdraft. I said we would take that out. 1 month later, February 24th, we took it out, and then we had a very strong reversal candle, and we moved higher the next day. That was Thursday and Friday into options expiration for that week, and it was very much that reflexive move. So the gamma levels were outsized. So there was a sharp covering of those positions, and then it can go back to its normal trend. So that's what I believe is happening today. And I kind of point that out by showing the last, the delta for SPX was really, 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 really oversold. Very, very oversold for SPY and Qs. And wouldn't you know, it just took that 130 in crude oil profit taking to cause that rotation back into growth. And so this morning we have lots of growth plays that are popping up, plus lots of plays that I have been with clients in what called my sector rotation shorts, which are basically Eurozone, Euro dollar, emerging markets, Germany and Japan. So these, if you look on my charting software, this is hour, this is day, this is week. That's basically chase time frame, swing, and trend. So I had recommended to clients that the Eurozone was going to roll over. And this was my price target, and literally it hit just this morning, obviously in the overnight, and bounced viciously. Same thing with EWG. These, by the way, have been multiple months worth of shorts. So we kind of just did that cascade, hit some key levels, and then bounced viciously. So this is up almost 8%, the German DAX. So you can see how this is distribution on a weekly. This was recommended short. We rolled over, and then we have some very strong reflexive bounces. The problem is, I don't think they're done. Same thing with the euro, dollar. this has been a really gorgeous, gorgeous short since 1.19, recommended to this 1.09. For anyone who's a currency trader, that's a lot of pips. But basically, this was going to be monthly. That was the price target. Now, if we take out this 1.8, the low, then we have an issue. Euro is very likely going to par, and more damage will befall the Eurozone and the markets there. So this is, oops, there we go. So this is why I am talking about, this might be a short duration bounce in the market, and we're having very large reflexive bounces in, Germany and the Euro area, but it's because of some nice potential reconciliation talk between Ukraine and Russia. The reality is sentiment's nice, but the outcome may not be so bright. So I was sticking to basically my themes, okay, which is things over paper, inflation is sticky, oil as an inflation hedge, and that's working. So I get back to this very key area of yields are definitely still bullish and bonds are still bearish. We have a completely new regime, right? Monetary tightening is not conducive for equities. So the only way that the market is really going to have outsized move higher is if the Fed comes out next week and talks back their tightening cycle and their rate hikes. So it's almost like place your bet. I personally think that they are absolutely going to continue on the tightening path. There are some similarities with 1970s, which also kind of support that claim. I like this. I've talked about it actually for a while, but back in 1973, there was a Yom Kippur oil shock that resulted in an oil embargo. If you take a look at this CPI back then, 1973, fractal, the Yom Kippur War, to right now, the Ukraine invasion, they're very, very similar. And this still didn't stop the Fed from massive tightening cycle. So I still see technically yields moving higher, bonds rolling over. I still see inflation as a big hot worry. So nothing has changed then in my thesis that I wrote about at the beginning of the year, that NASDAQ would underperform and that the high PE valued plays would also roll over. So this isn't, you can't see it very well because it's way too small, but I can kind of, hold on one second. Where the heck? Oh, let me find it. Here it is. All right. But you can see that we've had some very, very big adjustments, right? So here's that things over paper chart that I just showed you. And here's an example of re-rating of valuations in the very speculative, high-flying growth plays that everyone was excited about in 2020 and 2021. The ones that have been absolutely demolished. Zoom went from a price to sales of 124 to now 8. Get the point? Shop from 64 to 16. Coupa software from 50 to 12. Pins from 31 to 6. Hood from 26 to 5. Peloton from 21 to 2. Square from 15 to 3. Zillow, you get the idea. So that's a re-rating of valuations. And you can see that the high PE multiples of those growth plays were taken out and shot. I would contend that wasn't so hard to see. So not only do I study volume and breadth underneath the surface in my intermarket analysis, but I've been warning about it since November. So some things that really go a long way is the study of intermarket analysis. It might be a little geeky, but it really works. So for example, I can get rid of this little side thing here. Maybe not. No, I guess not. Okay, whatever. All right, so this is McClellan's Summation Index, NYSE. And yes, it's on a big picture weekly, but obviously I show daily as well. We've been rolling over under the surface very, very clearly since November, and then it just picked up speed starting in January. And I update these for my clients. This is the percent of stocks above their 200-day moving average. We had a high of 96.99%, the highest ever in the history of this indicator, right? Impressive. We're now at 35 and we're still not oversold. So when people tell you that the market is oversold, ask them on what time frame. This was COVID. That was the December massacre, the 20% drawdown from October to December 2018. So where are we oversold? This is also a really good one that I like. I wish I could get that moved. Yeah, this is, I have a whole bunch of stuff that I use, but the point is I've been warning about this for months and I update it all the time. So clients can know if they have my blessing to go swing long, and I have not given it. Let's just say in many, many months. And I keep giving reasons for it, and every short and every pop we've been able to short and very successfully. So this is another indicator, which is the strongest, right? Think New York FANG, Apple, Microsoft, Google, and the rest that are making up the S&P 100. Stocks above their 200%. Same thing. This was at 99. Very, very strong. It's now piercing 35. So it still has not bottomed and turned up. So there are lots of ways that I look for intermarket analysis to show the underlying strength and weakness. Of course, I'm also watching the dollar. I'm also watching rates. I'm also watching key commodities like oil. Energy crisis was a big deal. I talked about it back in October, and so far it has exactly played out. Exactly played out. So now where to? I think we're still going to be on a little tear here, but we're going to have some digestion. This is CRB, which is mostly oil, and it's on a monthly. Big picture. Multi-decade lows, negative oil. Look how extended we are, right? This is the 130 crude. That was my call. We hit it. We could digest bigly. We are in a really, really big digestion here. But the point of the matter is we're still, and this is XLE to SPY. We also came all the way back up here, which is basically where we just started to get some profit taking. I showed these when I was back in October. So I'm just kind of updating it for anyone who was, maybe interested in that stuff. So intermarket is definitely my kind of secret sauce to identify when the market is buyable for more than, a trade. Like right now we have a short covering rally in the European markets, Eurozone, Euro, all that, and in growth tech as commodities undergo some profit taking, but it's not done. The market is still trending downwards. So I still see risk and volatility coming in. How much further will we fall? Still think 4,000 with an overshoot to 3,800. Very, very easy to see that. Just needs a little bit of time. So this is a little bit of the intermarket. I just thought that might be interesting to kind of share. And then of course I share my market thoughts with clients to let them know what's going on. Chase, crypto, swing trend ideas, all posted for clients. We've had some really strong ones that have far out, let's say, moved a lot faster than I expected, like the defense plays, Raytheon and that kind of stuff. I think I have a list here I can go find. 1 second. Yeah, sector rotation calls. So from retail like Costco's and BJ's, Floor is a new one that I recommended recently because it is more brick and mortar, but it's doing extremely well. Shipping companies, nat gas companies, the best of oil and gas companies, copper, which I think is going to have a second leg life. A little bit of wood, even coal, BTU, which by the way spiked up viciously recently. and then had a margin call against it. That's a different dynamic. That's because they are hedging with some shorts, and the market moved way too quickly for coal. Mosaic, agriculture. So you can see that there are a number of names here that have been recommended trend trades for the past year and several months. None of them are tech, right? They're food distribution, they're fertilizers, they're defense. DBA is agriculture, BRKB is financials, all in support of the things over paper and growth to value rotation. So now what I'm looking for is some of these parabolas to break. I also showed you this. This was part of the presentation that I did. I don't remember if it was December or late November, but I mentioned NYSE looked like it was going to come back over because MACD was rolling over. Well, we're there. So we have definitely started to roll over. Let me just show you that real quick. And I think we have room to go. Here we go. This. So we have room to go, at least to the 100, which is a trend line tag. And that would bring us about 15,000 in the NYSE. And that might not be something you trade, but it's definitely very chartable. And I really like charting this. This is when I said, okay, we're gonna have a big move coming in soon, and it's gonna come back to this level, and it is starting. So that's basically, I'm updating from what I showed last time, which was this chart starting to roll over, which is the Russell. Think of it that way, small caps. And you can see that it has. So I had posted this one in November, and it's still rolling over. So not interesting for anyone who is doing chases. That's why I have a live trading room. But if you are a swing trader or a trend trader, these are the sector rotation calls. These are the thematic moves that you want to be positioned in, where you don't have to micromanage your trade. You don't have to look on a 5-minute chart, that kind of thing. So for the most part, I'm looking now at this copper trade I've mentioned, oil coming back in and kind of stabilizing at the 112 level. And then we're going to have, I think, some equity selling that's going to be dramatic the next time that oil moves higher. Not that we haven't already had selling in the equity market, but this was my base claim. Literally, I wrote this in March, and this screen I pulled from the fall presentation that I did here for Synergy, and it's going perfectly. It's going to plan perfectly when bonds roll over, structurally forcing rates to pop. Then oil spikes with the reflation trades, while momentum stocks are sold off because they're overvalued relative to value, and cause indices to correct. This move could be quicker than folks think, as liquidity is challenged in a bond sell-off and volatility in the bond market spills over into equities. So right now we have not had a scary bond move lower of size. I think that's still coming. And in which case bonds and stocks will sell off together. And I think it will be on the next oil spike above 130. So a little basing right now. And then I think we're going to have a lot more fireworks in post FOMC into that May, June timeframe. So let me know if you have any questions. Feel free to hit me up in chat. So gold. Let me show you something in gold. All right, so this is an important tell for me. So not too long ago, beginning of January, I wrote to clients, gold's still nothing. It's trapped in a wedge between 164 to 174. okay? And then it changed. 23 days ago, gold is coiling. It's starting to get a little busy. Gold triggered 23 days ago, not just the 174 level that I've given for months, but also in my bullish percent gold minor index. Let's see if we get some follow through. So this was basically that chart where we triggered, and we're now up here. So did we have a massive, profit taking hit today in gold and oil and the rest? Oh yeah, they'll be back. Yeah, I do believe they'll be back. So this was the one that I just updated today. Hold on. And follow through. And then this also, that was follow through, but also gold relative to SPY was moving much higher. So as for those who do gold SPX ratios, yeah, this is now way up here. Gold is way up here. Okay, so this is what I mean by I'm constantly still bullish. Look at that, it's coming out of the Bollinger Band. And that's on a weekly. And then 2 days ago, we're still moving higher. And then just last night. So we have profit taking, but it's still bullish. So I'm bullish on the precious metals complex, but only recently. I mean, you can see that literally, from January 29th, nothing, no trade to today, right? So I'm picky about when I get into it, I guess is what I'm trying to, a little circle of death there. All right. Hopefully you can still hear me. I have a little bit of a data issue, obviously. I'll show you Bitcoin in a minute. I don't have any thoughts on propane. That's a really good question, Chris. I do not know. This is tough. All right, so let's do, that's a funky little, what the heck happened? All righty, there we go. Something just works itself out. In the Bitcoin realm, as a proxy, it is pretty interesting that it is getting a bid this morning, but we need to get through some levels, and I do mean strongly. Oh, wait a minute. Just want regular Bitcoin. BTC USD, okay? All right. So I know this is really messy, but the point is, this is Bitcoin, to US dollar. It is trying to get above the 42,000, but it's really, and it's got to get above 45,000. Then it's got to get above 47,000. Then it's got to get above this green line right here is the 200. So pretty simple. We get some work to do in this complex. Otherwise, it's a rollover candidate. Same with Ethereum. The whole complex just does not have a lot of energy. This is an indicator that I like to use. And why? Because it kind of shows that, it's bullish when it's above and it's bearish when it's below. And we have not gotten back above the 0 mark. So for me, this is guilty until proven innocent. Risk of recession is absolutely rising. I had originally said it wasn't going to be until 2023 and that we'd be back to the 2,500 in SPX. In other words, the pre-COVID in 2023. If we get oil spiking higher the way I think we are, which is in the next few months with conflict absolutely in Ukraine, and a monetary tightening cycle, then I think we're going to have more selling, especially in the safety plays of, mega cap tech, Apple, Microsoft, Google. Earnings aren't going to matter as much. Buybacks aren't going to matter as much. It really has to do with an accommodative Fed suppresses volatility and a tightening Fed triggers it. So I see more volatility ahead. I think we're going to have more than 160 oil by summer. But it's more of a 6-month call up into election November kind of thing. It could happen faster. What indicator, Teresa, are you referring to? I'm having a little issue with my Slack. Yeah, there is a long vol trade that I can show you, and then let me know what indicator you're referring to. So I know everyone loves to follow the VIX, but it's not so retail friendly, right? And unless you really know how to manage this, and I don't recommend it, it's, you know, made to sell, not necessarily buy. But I will say that this is trending higher. And one chart to kind of keep on your radar is VXX. So it's got this left shoulder, head, right shoulder look. For me, it is beautifully trending higher, even before this complex, before the Russian invasion, and it continues to trend higher. So I can see this hitting 33 in probably the next 3 weeks. But it has to stay above $23, no exception. Has to close above $23 on a weekly, and this can see $33 pretty easily. Oh, PPO is an indicator. Yeah, I've got lots and lots and lots and lots of geeky stuff that I use in intermarket analysis. It really is my edge. But that is, there's intermarket and then there's technical. This is just technical. So, you know, VIX is trying to move higher. As long as it stays above 23, I can see this up here at 33 very quickly, next few weeks. Having said that, this is monthly resistance. We can come back down, market can move higher. You know, it's a dance. It's not all in one straight up line. Unless you were trading oil the other day, it was straight up. But the point is, not so usual. But this is the sector rotation that I have been on for quite some time. This is FXI, the Chinese ADRs, as well as KWeb. This is the kind of thing that I'm very focused on technically, which has nothing to do with the intermarket stuff. I can see the macro backdrop is, you know, shying away from the Chinese holdings, but then technically I'm looking and I'm seeing this massive gap down on a weekly that continues to just digest. Every pop gets dropped. That happens to be a monthly trend line. That has to be a monthly trend line. And this is FXI, China ETF. We roll over. So every single pop, I was like, it's going lower. It's going lower. And it overshot, in fact, my price targets. So same thing with KWeb. Yep. KWeb, same thing. Had this massive gap down on a weekly. So think Baba, Baidu, Tencent. So these are trend short candidates that I present and then I track and update. Rolling put spreads is my preferred for a trend that's moving down like this. So it kind of started with a macro theme, and then it completely emerged not just as a dollar short. In other words, as the dollar goes higher, which we were, by the way, having strength in the dollar, that would put pressure on emerging markets. But everyone was trying to come in and buy Baba. And I just kept saying, nope, 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 we're not there yet. And by the way, we're still not there yet. So unfortunately, I don't get emotional about, I gotta, you know, I'm gonna miss something. I would rather be right than miss out. So I can see a whole bunch of bounce candidates in here, and I can spy those and set those up for clients, but I am still a bear. So the trend is still down. But sometimes I get, that is a little bit trickier, but these were beautiful, right? So the euro short, head and shoulder right into 109, gorgeous. Eurozone, that was just a waterfall. It took forever. and then boom. So this is the frustration, right? Is like, how do you play that? Oil just tagged 130 with precision and then dumped 14%, right? So you have to be fast. Or you're coming in this morning and it's up 8%. Your options obviously are worth less than they were yesterday by a nautical mile. So do you hold and wait for it to retest? Yeah, so those are some of the misses that frustrate me too, because I can be right, but then we had a massive overnight gain on this position of 8%, which is the opposite, right? Which is undoing the it's exploding the IV in the wrong direction. So now I'm waiting for this to tap out at 42.44 and then roll back over. But all of these have definitely been in protracted downtrends, and they're still really viable. This was the Nikkei short. And again, this is MACD. PPO is another kind of similar indicator that I use. All of this is in stock charts. All right, the K-Web. But I don't think we're out of the woods yet. I think we need to set up a little bit of stabilization, and then means bottom and then turn and then head higher before it's a really, really high probability move higher. And the same thing with these Apple. I mean, look at the trend on here on the weekly. Overshot and then came right back inside the channel on the weekly. There's lots of room to the downside. I'm wrong if it gets back above 176, but I don't think I'm wrong. So far we are staying below 165 and we're slowly but surely rolling over. I just don't see any reason for to be bullish on Apple or Microsoft or Google. I just see tons of trend reversals in the making. Hey, Archana. Amazon announced a 20-for-1 stock split, so they're freaking out right now, aren't they? Oh, yeah. All right. Well, we'll see if that's going to be oh, that's a nice timing. Well, we shorted that last time for earnings. So that worked extremely well with that earnings gap. It completely rolled over. Where are we now? 30.70. Let's see what it does up here at 31.01. So far, doesn't look to be holding. UVXY is a little similar to VXX. We all have our preferences. That one's mine. But I'm still let's just say, very, very skeptical that we're going to have a sustained bounce right now, unless the Fed comes out and completely goes dovish. I think we're going to have continued pressure. And one particular sector that looks still to undergo distribution are semiconductors. So we've had lots within IPO and fintech and internet, lots and lots roll over back close to their kind of pre-COVID levels, but not semis. Semis have definitely held out. And I think there's definitely some room for weakness. So I have been a bear, especially since January, in all of the high flyers, bunch of plays that just do not seem safe. Lots of tech plays have definitely sold off. We've had a bounce today, but oftentimes the bounce is sold into, and I don't see that character of the market changing yet. So so what I wanted to kind of just show was that oil trade update, things over paper update, careful on oil being done. A lot of folks will say, yeah, we can't have it higher, but I think we actually will. I think copper might be next as well. We definitely have lots and lots of intraday volatility, but big picture volatility itself is trending. We have a rotation into precious metals we haven't had for a while, although it did hit precisely the 2011-12 highs with the 2020 highs. So, you know, there's that. It has to get above 2000 now. We have lots of tech bounces that are fun to play intraday. The Amazon 20 for 1, we'll see if that holds up. But for right now, I don't see any reason to be swing long. I'm looking for a reason all the time. I don't want to be, you know, in this holding pattern of not knowing. I really want to have a high conviction. And right now my conviction is it's still short the rip. We've got some more commodity crashes in counterparty risk that I think are going to happen, which create this short covering like we've seen in nickel most recently, and wheat and nat gas over in the UK. I think we're going to have some rolling parabolas in oil and nat gas and copper and other materials that are very, very short supply. So I think for the most part, that theme is going to stick with us for a little while. I am very happy to invite you to take a look. We've got quite a few products here from macro to micro, and you even have a Discord with some fabulous traders and moderators and a lovely community there. We have some free videos that go up. Archana is right now a panelist in this session. She's also my advanced options trader for Discord, and she's in my live trading room as a moderator, so she's awesome. On my YouTube page, you'll see not only Rithika's weekly list that she's trading. She's our Discord manager, but you'll also see some key macro themed presentations as well. Just did one recently. Russia is attacking Ukraine and the US dollar. Is this the end game for the US dollar? I did a whole day of live trading the day that we had an invasion alert. And it just so happened that we were really, really oversold and lots of puts had been bought, and basically market dealers had to cover, and it created a lovely squeeze, which we caught and did that live. So definitely sign up for YouTube. Definitely hit me up on Twitter, which you can find me here at Samantha LaDuc. And literally, this is a YouTube that I did back in October for a $130 call, which we just hit. And I wish you a great afternoon and spring. Let me see if there are any other questions in the last 5 minutes on charts of interest. And let's see if we get any follow through on this current bounce that could lead into FOMC. But I would say be careful, I'm trying to find my chart here, because we have on Tuesday, we have a debt ceiling. March 15th needs to be rolled once again. We have FOMC on the 16th, which is a big deal. And then we have options expiration next Friday, and it's a big one. So it's a quarterly one. So we'll see if we get any follow through in the markets for this particular bounce, but otherwise, check it out. If you're interested in my live trading room, I run this custom engagement. So clients give me their charts that they're looking at, plus I review all of my intermarket, macro, technical, sector rotation, chase, swing, trend, crypto, oil, commodities, you name it. So definitely let me know if you have any questions on any of this. And I wish you a great spring. We're finally going to get some, huh? I don't know. I'm watching a snowfall right now in Boston. All right. Yeah. And this is where you can also find out about the Institutional Edge product. And Big Ideas is a little bit different. It is very much trend trading vehicles, not the live trading room with my moderators. So I have, yeah, I've got 8 contributors in my live trading room and in Slack. So it's definitely beneficial to join the fishing club. Any questions? I will wish you a great afternoon.